Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of Back Trading in Real Life, Part 2. Ladies and gentlemen, how's everyone doing? I'm doing absolutely fantastic. Why is it Part 2, you might ask? Well, last week my internet decided to, it just not work. It stopped working in the middle of everything. Everything went zero dark 30. All of my screens just shut off. All the data stopped working, and so we had to redo it again. So thanks so much for joining us. I really appreciate it. For those who are live, type in a 1 if you can hear me okay. I can see you guys chatting. Kim's throwing in. So hello, everyone. David's throwing in some 1. Michael, Rich, Kim, Jason, Jesse, Bob. For those of you watching on the recording, thanks so much for watching this. I appreciate it. If you're watching from YouTube, make sure to subscribe to our YouTube channel. Twitter, @NewsomeNuggets, Facebook, LinkedIn. We do the whole social media thing, ladies and gentlemen. All right, let's get started, shall we? Vinny says, my brother from another mother. What's up, buddy? I wish I had your tan, Vinny. I wish I had your tan, man. I'm a white, pasty Casper. And he says, just a little slow on mobile. It can be a tad slow typing, but no worries. Appreciate you throwing in a 1 anyway. Vinny says, you wish I had my accent. I do, man. The British accent is a powerful one. Just to make sure, type in a 3 for those who are here. If you can see my Think or Swim charts. I believe we can. All right, great. So I got all this working. Okay, wonderful. This is good. Exciting. Well, let's just go ahead and get started, shall we? Just kind of as a recap, what tonight is going to be is back trading in real life. And we are discussing what back trading is, how it works, and why it's beneficial. Really, the why it's beneficial is the most important part. How it works is kind of rudimentary. If that's the right word. I don't know if that's the right word, but how it works is blasé. It's definitely a good word because it doesn't really matter how you back trade. You can use any system, any broker, any charting software. You can jerry rig it. You can do all different kinds of things to figure out exactly how to back trade. And I'll show you different ways to do that tonight. So the how is not necessarily important. Why it is beneficial though, think about if you could somehow go back in time and trade stocks and profit from those. Unfortunately, aside from an actual time traveling device, which I have not created yet, this does afford you the opportunity to go back in the past and see what you would have done in given a certain situation, so you can figure out what you could do in the future based on how you acted in the past. Create some plans, create a system, create a strategy, and then kind of go from there. At least that's my thinking anyway. So we'll be interested to see what happens. So what I'm going to do, just like last week, to make sure that it's very, very random, I'm going to get someone to type in a stock ticker. It could be anyone. First one that gets a stock ticker in there is going to be the one that we're looking at today, whichever one that is going to be. Jesse says PNR. I have never heard of PNR before. Let me just look at it. Okay, PNR. Looks like this is going to be a good one to trade. Bottom line, Jesse, the good news is I have never even heard of this company to my knowledge. So there's going to be zero chance that I know how this thing trades. All right, so secondly, we got the stock. Now let's figure out where we're going in time. Where are we going? Pick a year. Someone give me a year. Give me a year. David says 2005. I think last time we figured out we could go back to 2013, but I'll try. 2014 said Bob. Okay, so I'm going to try 2005 first. If that doesn't work, we're going to do 2014. Someone give me a month that we're starting with. Doesn't matter. 4, so that would be April. Okay. So what I'm going to do in Think or Swim. So again, just as a reiteration, we could do this with any charting software or any broker. I'm just using Think or Swim because it's available. A lot of people use Think or Swim. I figured why not. All right, so if I click top right-hand corner on demand, we automatically go into a virtual account. So this account is not active when you see this orange, coloring or yellow, whatever. It's a weird mustard colored color. It's it's an ugly color. But bottom line, this is now a virtual account. It's not a virtual account. So we're going to click on this. It already preset to April. Let's see how far we can go back. Okay, we can go back as far as April 2013. Is that a good compromise? Ladies and gentlemen, all right, we're going to go back to April 2013. Just going to take a quick second. April 2013. Let's go on the 1st of April 2013. Let's see if that works. Okay, here we go. All right, so we're here. PNR, this is the daily chart. April 1st, 2013. Let's make magic. Part of back trading, and the reason it's very exciting, is so that we can determine, number one, what we're doing when we do pull up a chart for the very first time. So anytime I pull up a stock chart for the very first time, what I do is I go out to a weekly chart. Let me see if this works. If I go to a weekly chart, it should pull up the weekly data all the way back until, all the way back until May. So again, we're going to have some limitations with how far we can go back, but that's okay. I figured this out today. This was kind of cool, so I can go to the right. So what I'm going to do is I'm going to draw some support and resistance. I'm going to go to price level. Again, for the very, very first time, I create a chart. I begin to draw based on a weekly chart to give me an idea of where that stock is. And what I'm looking for are the 2 or 3 most important support lines on the chart. So we're drawing support resistances in red. And the very next one I'm going to determine is going to be this one right here. There we go. So let me go ahead with my drawing tool and show you guys which price points I was looking at with my eyes to draw these 3 lines. Okay, to draw these 3 lines. Number 1, I looked right there. Number 2, I looked right there. And number 3, I looked right there, and I was also looking at right there. The reason I liked the one that I chose was because if I do a blue arrow, you'll notice the blue arrow and the blue arrow have a nice little sync up where we had an obvious bounce. In fact, right there we also had a higher low, and we can see using past data. Oh, that didn't work. I'm not the best at drawing trend lines. Let me try this again. There we go. Using past data, we got that higher low. All right, so I'm going to remove my drawings. There's my chart. 3 support resistance lines and a trend line. That's all we got. All right. So now what? Well, now at this point, our objective is to figure out what we can do. So we're going to look at the trade, and we're going to immediately try to determine the direction of the trend. We're going to try to determine the direction of the trend. We have 3 directions, ladies and gentlemen, up, down, and sideways. I have a rule. You have 2 seconds to decide. If you can't decide in 2 seconds, it's probably going sideways. So ladies and gentlemen, go ahead and write in your direction. What do you think? Up, down, sideways. Bob says up. Up, 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 up. Everyone's saying up. Yep, north. It's going higher. We're at least more bullish than bearish. We can determine that. All right. So we're going to be looking for some bullish trades. It's that simple. We're looking for bullish trades. Right? So once you determine a direction, you get the opportunity to decide, am I going bullish, am I going bearish, am I going neutral, am I going sideways? And once you pick bullish, based on the direction of the analysis, that is going to be the strategies that you're looking to implement. Could you be wrong? Of course. When will you find out? In the future. So your objective is going to be to determine the direction, and then from there, simply place your trades. Boom! Pretty simple. So we're going to go from a weekly chart now to a daily chart. So here's the daily chart, and we're going to start doing some candlestick analysis. So once this loads, there we go. So I'm going to zoom up here. And I wonder if I can do this. Give me a second. I'm practicing this. I wonder if I can do this. I can. Oh, yeah. Thank you, Maritzia, for helping me with that, by the way. I don't know how to remove these date lines, but that's not that big of a deal. All right. So I got some major support resistance. You guys want to know how easy this would be from here? Here's what we could do. If we were to draw additional lines, so I got the 3 major ones. I could draw a minor support line right here and another resistance line right there. That could be my trade setup. So for right now, that's exactly what I'm going to do. I'm going to wait, and I'm going to not use any other indicator other than candles, support, and resistance. So I'm going to sit here. I'm going to look at this trade. I'm going to go, you know what? We are dead sideways. So what I'm going to do is I'm going to plan to buy this trade when it comes down to either $50 or $48. My objective is to buy at one of those prices. How do I determine which one I want to buy at? I'm going to give you guys a shocking answer to that question. You ready? How do you determine it? The answer? You simply pick one and go for it. That's it. That's it. I know you're like, oh man, I want more. Well, if you want more, you can say, okay, I want to buy at the price, and then I'm going to look for XYZ at that price. So if you want to get an exact price, you could say, all right, I want to look for a Morningstar reversal, or I want to look for a one white soldier. I want to look for a bullish engulfing. I want to look for a hammer. I want to look for something. Okay, so if you're saying, all right, that's what I want to look for, I get it. I get that. So let's go ahead and remove the drawings. And what I'm going to do is I'm just going to go one day in the future. I'm going to go a day in the future. That's not how you do it. I got to click on April 2nd and click the go button. And it does take a few seconds to load, but that's fine. So here you go. That's where we're at. We're still perfectly sideways. So we already know one thing, folks. We're going to have to be patient. We're going to have to be really patient. I can already tell from looking at this trade, we're bullish, but we're bullish to neutral. I'm not going to bore you with backtesting strategies like put sales and covered calls or credit spreads, because those are some of my favorite strategies. And the reason they're my favorite strategies is because most stocks are, on most occasions, bullish to neutral. They very, very rarely have an amazing trend. So right now, this stock is going up, but it's kind of bullish to neutral. So if I was trading this with real money, if this was right now, if this was today, I'd probably be looking to do a put sale somewhere down here. Now, I can show you, and make sure you guys remind me to show you something called Think Back, right? This is on demand. So remind me to share you something with Think Back in just a moment, a little bit later. I can show you what the option price would be, and you can go and use Thinkorswim to figure out what the option trade would be at that time. But again, I'm not going to bore you with non-directional strategies, because non-directional strategies are easy when you're back trading. You just press the next button. You're like, next, 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 next. You're like, okay, how would that have worked? What's most intriguing when I do a back trade, ladies and gentlemen, when I'm doing this candle by candle, is I'm figuring out how few trades I end up taking on this particular stock. I mean, we really take very, very little. It's not that much. If you want to take more trades, what you're going to have to do is going to have to go to a smaller time frame than the daily chart. And if you go to a smaller time frame than the daily chart, we're going to have to move up some of these additional support resistance lines. So let's practice that really quick, because I actually, believe it or not, have not done a lot of hourly back trading on Thinkorswim. So I'm going to draw two support levels just for our practice tonight. I'm going to draw a support level here, price level right here. And I'm going to draw another resistance level right here. There we go. Now we got a few. I think I can probably make those bigger, but this is style. It's no big deal. All right, I'm going to come in here to the hourly chart. So here's the hourly chart, and here we go. So we're still in the middle of this channel. This is what's really cool about Think on Demand. From this chart, what we can do is we can right click down here, we can come down to buy custom, and we can do an OCO bracket. So we can do an OCO bracket, and based on the chart settings right here, I can look at where my support level is. So my support level, ladies and gentlemen, I'm gonna write this in with a nice color, something easy to read, like purple. My support level down here is $50.65. So what I'm going to do is I'm going to do an OCO order that buys down here with a stop down here and a target right there. Okay? So now what we're going to do is, now that I have my plan, right, buy low, sell high, buy off support, sell at resistance, mitigate your risk, is now my objective is to come up with how much am I willing to lose on this trade. That will be your risk. What is your risk? So someone go ahead and give me a risk number to use for this entire back trading session, and we will continue to back trade until we're profitable. 500 bucks. Okay, $500. 500. So that means if we lose on a trade, we're going to lose approximately $500 or less, and if we win, hopefully we make more than $500. So how do we calculate that? Well, again, this is my number that I'm going to look to get in, and I'm going to place my stop at approximately, if the low back here was 50.55, I'm going to set my stop at 50. So what that means is if my entry is 50.65 and my stop is 50, I'm going to do some math. Here goes. 50.65 minus 50 is obviously 65 cents of risk. If I take $500 divided by 65 cents, I'm going to come up with an amount of shares. That's going to be 500 divided by 0.65, 769 shares. That's how many shares I'm going to be buying. So I'm going to come down here to my OCO order system. I'm going to click link, and I'm going to type in 769. They're all going to pre-fill. I'm going to do a limit buy of 50.65. So here's a limit, and make sure to select good until cancel. Ticker symbol G, or not ticker symbol, GTC. Good till cancel. That's what that stands for. Now this part I'm not going to walk through very much because this is just figuring out how Thinkorswim works. Okay. So I'm not going to go mostly into this, but this is the stop right here. I'm not going to go into say what stops are or anything like that. I'm just going to go through this. And the target is going to be about, let's say, 54. So our risk is 65 cents. Our reward is about $3.50. It's about a 1 to 5 risk reward ratio. I think it's a pretty solid trade. Order triggered by good till cancel must be good till cancel or plain market order. I did not know that. Order triggered by good till cancel order must be good till cancel. Okay, here it is. Yep, there we go. Sorry, I had to change all three. I could link those as well. I didn't. I don't know why I didn't do that. Okay, so I'm gonna click confirm and send. So notice this says on-demand virtual order. Now here's what's very interesting, folks. Keep this in mind, that this order trade would be $38,949.85 of an investment. That's how much money you're putting out there into the market. Okay, 38 grand. What is our risk? Can anyone remember? Our risk is 500. So even though we're investing 38 grand, our intention is to only lose $500 of that amount of money. So I'm going to go ahead and click send. And I'm going to delete my drawings. And here's what it looks like, folks. Real time on the ticker symbol PNR. This is what it's going to look like. So now, here's the hardest part of trading. In my personal opinion, the hardest part of trading is what comes next. Who can tell me what the hardest part of trading is going to be? Come on now, I want all of you guys to tell me, because this is what back trading is really for. Back trading is really for finding out your flaws and weaknesses as a trader and more or less exploiting them. Yep, you guys are all writing in waiting or patience. That is absolutely correct. Patience is going to be the most difficult part of trading. Always will be. Probably always has been. I believe it was Warren Buffett who said the stock market is a great dictator between who is patient and profitable and impatient and broke. So now what we're doing here is we literally have to wait for this trade to go through. That is really what we're doing. So what I'm going to do is I'm going to go forward an entire week. Ladies and gentlemen, let me repeat that slowly. I'm going to go forward an entire week. Don't you kind of, well, I was about to say, don't you wish you could do that in real life? But you really don't want to do that in real life. Each day is precious. You don't want to just skip 7 days of your life just so you can maybe make some money and find out what the trade's going to do. But it's going to be about patience. So we're going to go forward 1 week. 1 week. And we're going to see what happens. Ladies and gentlemen, did I get triggered in? Yes or no? The answer is no, I did not. What do we do now? Well, so again, we're trading in a channel. I have the ability, if I want, to place a bearish trade up here. If I want to. I could go with a sell high, buy low strategy. I might do that in this situation just for educational purposes. In a real trade, I wouldn't do this. And can someone remind me as to why? Unless I could get a little bit more data to find out if there was a really good resistance right there on the weekly chart, which I can't do in this particular setup. I could do it on another charting software really quick. I can just find out. That's kind of cheating. So I'm not going to do that. Yeah, I won't do that. But I could just go back and figure out if there's a good weekly resistance right here or something. But the reason I'm not doing it is just like Vinny, Kim, and Bob are mentioning, is going against the trend. The trend, as we established, is bullish. So yes, you could take this bearish trade, and it could work. But counter trend trades are much quicker. I was about to say much more fast and quicker. That's literally the exact same thing. So bottom line is I'm not going to be taking that bearish trade. So I'm going to wait another week. Here we go. Let's wait another week to see what happens. All right. So again, we can see that the stock did trade up, and it made another high. It made another high. So you may or may not have taken that trade. If you did take that trade bearish, you might have gotten stopped out, or maybe you didn't, right? I don't know. But we can see that it did go down, and I'm totally fine missing that trade. That is okay. What I can say in this scenario, what would be really interesting, is you can use this information again to help you with covered calls, put sales, because we've already traded 2 weeks on the stock. And I can already tell you when we pulled up the trade, I was bullish to neutral anyway. So I would have been in some kind of bullish to neutral strategy, credit spread, bull put spread, put sale, something like that. So what I'm going to do is I'm going to hop back over to the daily chart since it's been 2 weeks and see if this information changes my analysis at all. So I'm going to take it and I'm going to zoom in so I can see on my chart the last few days. Give me a quick second here. I'm going to bring this down. That's a very, very helpful thing. Again, pointer. I'm going to really zoom in here to this data. All right. No, nothing changing yet. Nothing changing yet. It's a little bit of a bearish gap for sure. This day right here on April 12th. Can someone remind me what type of gap that is? Bullish candle gapping down. Anybody? What type of gap is that? Bullish candle gapping down. It's a gap and go. Yep, it's a gap and go. And it went, right? People are trapped. So other part of backtesting, what I really like doing when I'm backtrading like this, is I really try to answer the question why. And let's do that right now. Because again, folks, that's the point. That's the antithesis, if you will, of backtrading, is to really, 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 really get good at candlesticks. Candles. This is key. Candles. So did someone buy right there, yes or no? And again, folks, if you're here live, I want as many people to answer this as possible. If you're watching this from the recording, feel free to post in the comment section below, or you can always email me, jeremy@reallifetraining.com. Let me know what your thoughts were. But are people buying right there? The answer is yes, unequivocally, 100%. Yes, they did buy there. How do we know that? Because it's a bullish candle. That simple. That's how we know. It's a bullish candle. Since it's a bullish candle, we know some people bought there. Are they losing money the very next day, and are they upset the very next day? Yes or no? Yep. So by understanding that analysis, by mentally realizing that people bought the prior day, and then the very next day they're sad, they're upset, and they're losing money, that's going to cause some selling to come in. So this day right here could have been a very profitable 2 days for my day traders or my short-term swing traders. This three-day candlestick pattern is called a what? Here's the 3 candlesticks right there. What's that called? Evening star reversal. Yep, evening star reversal. And this 4th candle right here that I'm pointing to in purple almost opened below the low of that candle. In fact, I have a very special name for the candle that occurred right here. Can anyone tell me a very special name for that candle? It's a bearish candle that opens and closes below the prior day bullish candle's close. I call that a new black crow. It could also be called a one black crow. By textbook definition, it's not a one black crow because it's not a long day candle. It's a very small candle. I would call that a new black crow, but if you said one black crow, that's also correct definition. So anyway, bottom line is, right, folks, that keep in mind another thing that I want you guys to have a breakthrough, because someone's mentioning this in the chat pane. They're saying it's confusing to find out if people are buying because of this upper shadow. Ladies and gentlemen, remember how upper shadows are created. Upper shadows are created from selling pressure, yes. But remember how that wick formed. The stock opened, traded up. How do stocks trade up? Exactly. Someone had to buy first. Right? Buyers made the candle large, and then sellers came in, creating the actual wick itself. If the sellers didn't come in, you wouldn't have an upper wick. So we know that some buyers came in, people probably who were taking the breakout of that channel. People who were probably taking the breakout of that channel. Those are the guys who went in bullish. Is there a way to have known to not take that breakout bullish? I can see obviously in hindsight, but is there a way? Because right, back trading, that's what it's about, is using hindsight information, using hindsight analysis to help us create a plan for what not to do in the future. Is there a way we could have known to not have taken this breakout? Excuse me. Kim says lower time frame. Nick says volume. Garanga has been watching my videos. Here's really the answer that I'm looking for. Excuse me. Here's really the answer I'm looking for. 3 big bullish candles in a row. That's it. You have a lot of buying in a row. Let's look at the last few times this stock had a lot of buying in a row and attempted to make a higher high or a higher low. Are we sensing a pattern at all, folks? This is a part of trading where many analysts or coaches or teaching companies or academies or whatever, this is where most companies just totally get it wrong. They teach their students to buy into strength and sell into weakness, meaning when a stock breaks out of resistance to buy bullish, and when a stock breaks out of support to go bearish. In my opinion, that's just blatantly incorrect. That's not the Warren Buffett way, if you will, or the Paul Tudor Jones, or the Jesse Livermore, or the Bill Ackman. Buy into weakness, sell into strength. AKA buy low, sell high. Because if you get a bunch of bullish candles, boom, 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 going up, and you take that breakout, You're the one buying into everyone's selling. You're that person. You're the person who is buying right here because you were afraid to buy right there. Here, let me give you an example. This is going to be hurt. This is going to hurt a little bit, but I want this to sink in. Kim, I'm going to pick on you. Is that okay? This is an example, Kim, but I just need a name. And you're awesome, so I figured I would go with you. All right. So here's Kim's plan. Kim comes up with a plan right here to buy the stock at $51. Kim draws in the lines for the chart, and Kim has almost the exact same lines I do. Stock comes down, comes back up, and Kim says, I'm going to buy 51. Very next day, this bearish candle comes in. What does Kim do? Kim gets scared. Kim sees a bearish candle and goes, oh man, this stock's going down. This stock's going lower. I'm flipping out. I'm upset. I'm terrified. I am afraid of what? I'm afraid of losing money. Or I'm afraid of being wrong. Or one of the two. So what does Kim do? Kim does not follow the plan that was created in the past. Future Kim and past Kim and present Kim are three different people. Present traders are always emotional. The best traders are the ones who listen to their past selves about what to do in a present situation. Don't listen to future Bob or don't listen to present Bob or present Jeremy or present Kim. What did they say in the past? And then just simply do it. So for example, in this situation, Kim doesn't buy 51 like Kim says. Stock trades up, trades up, trades up. Now what does Kim do? Oh, I'm missing the move. Ah! And Kim gets upset. And it's like, well, you know, it hasn't broken above a high, so I'm going to wait. This day right here, Kim gets in bullish because it makes a new high. Stock trades down. Kim can't take it anymore. Just about to exit. Praise to God. The stock bounces, comes down a little bit lower. And what does Kim do right there, ladies and gentlemen? Kim hits the stop, loses on the trade, and is another victim of buying high and selling low. Ladies and gentlemen, input the name Kim with your name or anyone else's name that you know, because we have all, and I'm pointing to myself with some really big thumbs, all right? We have all done this, especially me. In fact, at one point when I first started trading, I said to myself, I should write a book. I should create a company that says, here's my company's name. I almost bought this website had I had money to do it. Do the exact opposite of what I do.com. Here's what I'm planning on doing. Don't do this, and you will make money. Because what I was doing is exactly what I just drew here on the screen. I was saying to myself, all right, I'm going to buy low and then sell high, and then I don't trust myself. And the stock goes up, and I buy high, and I sell low, and then I just rinse and repeat the process over and over and over, right? So once this move happens in 2 days, what do I try doing again, folks? What do I try doing again? Oh, man, it's breaking out of the channel right here. I'm going to get in bullish because it's a breakout. Buy the breakout, and I lose money again. It's really kind of amazing how it works. And again, we've all done it. But when we're back trading, our objective when we're trading is to understand our own weaknesses. Really ask yourself, what am I going to do here? So for example, here's a perfect example right here, right now. This trade is coming down mad bearish. It's coming on down. And I do not know if this trade is going to work or not. Now, sure, I can do some additional analysis. I might be able to tweak my entry, my stop a little bit, but here's really the key, folks. let's say I take this trade and it works, right? Maybe it does, maybe it doesn't. I don't know. The point I'm trying to make is if you can sit here and you can say, you know what? I'm going to wait for this stock to come down to support and then I'm going to buy. Go ahead and start ingraining inside yourself that that's what you're going to do now, in the present, like in 2000 and whatever year it is. That's what we want to do now. So if you can do this in the past, this is the way to really ingrain yourself that you are going to take this trade, regardless if you are wrong or not. Telling yourself right now, psyching yourself up, saying this is real money. And I do not care if I am wrong or if I lose money, because those are the two biggest fears that traders have, and those are the two biggest fears that will keep you from trading profitably. Honestly, I'm looking at this chart right now, and my present mind is saying, you know what, Newsome? It's probably not going to work this time, man, because it's bounced off this level like 5 times before. There's no way it works the 6th time. Please tell me, type in a 1 if you're thinking that right now, because I'm thinking that right now. Like, President Jeremy is thinking there's no way this trade works. but past Jeremy has already set it up. So there's nothing I can do now. I got to wait. Right? We got to build that discipline. Sometimes simply taking a trade that you, quote unquote, know is going to go against you, even though you have the trade set up. Because let's be honest, folks, let's be honest here. How many times have we known what's about to happen and the exact opposite thing happened? But we forgot about those times, didn't we? We totally just, bloop, that just skipped our minds. But the ones that we remember is when we go, oh, I know that won't work. And you look at the trade like, oh, yeah, that didn't work. Man, I'm so smart. You remember those times, but you don't remember the times like, oh, yeah, I know for sure this is going to happen. And then the stock's like, nope, not even close. Would you guys agree with me? So what I'm going to do for practicing purposes is I am literally lifting weights right now in my mind. I am lifting weights in my mind to mentally prepare myself for a real money trade. So when this exact thing happens again in the future, I will stick to my guns and I will trade it, because the biggest takeaway from tonight's session is that is more important than your analysis, your strategy, what stocks you're trading, or how much money you have in your account. It is more important to be able to build the discipline and the patience muscle over anything else in trading. Ladies and gentlemen, if you can master the discipline portion of trading, doing what you say you're going to do every single time, even though you think you're wrong, doing what you say you're going to do, doing what you planned on doing, even when you think you are incorrect, build that muscle now, and you can become a profitable trader. Type in a 7 if you're pumped up to find out what happens on this trade. Because again, even if this trade does not work, doesn't matter. What I'm doing is I'm building that muscle to do what I say I'm going to do what I'm planning on doing. Because if you cannot have that muscle, if you do not have that capability, folks, you will not make money in trading. Okay? All of the traders who make money trading, and there are a lot of them are here right now. I hate to call out names, but I'm going to call out Bob's because he's the first person who's in the chat pane right now. I've met Bob personally. He's an amazing dude. He broke his trading plan one time, to my knowledge, about 1.5 years ago. He hated the pain, and I do not believe he's broken his trading plan since. And since then, Bob, would you remind me, are you profitable or not profitable since about 1.5 years ago, since last time we met? He says, no, I have not broken my trading plan. And again, I know he's profitable, but he'll write in some metrics in just a second. I'm just calling out the, I mean, I'm just saying, like, it's a thing. I have seen Bob's trades. He tells them to me often in the trading room. And he says, yes, I have doubled my account. Ladies and gentlemen, can we get some love for Bob? What? Doubled his account. Come on, folks. I think that's incredible. So again, what has Bob done that's different than other people? Simply followed his plan. That's it. Folks, all he did, and he's not using anything special. He's not using a strategy that you guys have never learned before. He's in the afternoon trading room. He's an amazing trader. We've been friends for a while. Sorry about gloating and blah. I just think you're awesome, man. You and your dad. Bottom line, all he does is follow his plan. That's it. There have been times when me and Bob have disagreed on a trade. And I said, Bob, I don't think that's going to work. What do you guys think he did? What do you guys think he did? He took it anyway. He took it anyway. Didn't matter. Bob says I did it anyway. I know. So, and even if I was right or wrong, honestly, I don't remember. I really don't. I don't keep tabs if I'm right or wrong. It doesn't bother me. So bottom line is, if I say, hey, Bob, I don't know if that trade is going to work or not, man. That's just my perspective. Bob goes, all right, cool. Newsome doesn't think the trade is going to work. Whatever. And he does it anyway because you've got to build the discipline. You've got to build the discipline. You've got to build the discipline. You've got to do what you say you're going to do. And if you can do that, you can properly trade. If you can't do that, you will not make money. Let's go find out if this trade works. Here we go. I'm going to have to go forward. Let's go forward 2 days. It should probably trigger by that 2-day period. Here we go. Okay, nothing yet. Nothing yet. Let's go forward. Let's go forward 3 more days. Still hasn't triggered. Nothing's happening. 3 more days. I believe. Hold on. Give me 1 second. This is. I mean, telling you, this is a flawless example. Flawless, flawless, flawless. I think it updated. Hold on. Give me 1 second just to make sure. Filled orders, working orders. Just give me a few quick seconds. That's that. I'm trying to figure out, okay, so it didn't trigger. So again, this is the part where I'm just trying to, this is honestly, this is just the actual stock itself. Buy 769, 50, 65 limit. Oh. 50, 65. Maybe it can't trigger if it's not on. Grong says, can't you hit the forward button? No, forwards never worked for me. If I do step forward like this, it does like a minute candle. If I do a minute candle. Bottom line, here's the truth, folks. The truth is I can look at this trade and see that it didn't work. Barely. Right? We can see that we would have gotten stopped out at $50. I don't know why it didn't trigger. I think it has to trigger when I'm actually doing the candle, which is a little annoying. I didn't know that that was a thing. Now, keep in mind, so I know that, let's go back 2 candles because I will make a point here, I promise. Let me go back 2 candles to the 20th. I think this 23rd of April might have been earnings, honestly. So bottom line is we might not have traded this anyway because earnings was right around the corner. But I can show you on this trade, we definitely would have gotten triggered in and we would have gotten stopped out within 1 day. But let me come in here to an hourly chart because this is one of those situations where depending on let's zoom out a little bit. Okay, depending on your time frame, your time schedule, depending on what I'm about to say, like, yeah, how much you work and things like that, right? That's going to depend on what kind of strategy you do. That's going to depend on where your entries are, where your stops are, what time frames you're using. Are you using the daily charts or the hourly charts? If I was using the hourly chart right here, as this stock is coming down, this is something that I will share with you. This is one of those tidbits because let me just go ahead and mention the trade didn't work. I'm not trying to gloss over that. I can look at this and tell you that the trade didn't work. We would have gotten triggered in. We would have gotten stopped out. I mentioned as it was coming down, yeah, we could probably adjust our stop a little bit, maybe lower it. There's a few places where it could have worked. This is just a tidbit that I'll share with you guys. If earnings really is on the 23rd, and I'm sure I could figure it out. I'm going to click over this. Earnings, yep. Earnings are on the 23rd of this month. So first and foremost, we will not be getting into this trade because if it was a real money trade, we know that earnings were coming up. If we were going to get in over earnings, would we have such a tight stop, yes or no? The answer is no, right? If we wanted to buy some shares over earnings, we probably would have taken that stop and put it down a little bit. Right, we would have dropped it down or put it down, I mean, at least a little bit lower, giving it some wiggle room. Again, so if we were getting in and we're holding over earnings, we'd have a little bit more of a loose stop. And we can still see the trade did work. It did bounce off of that support. But here's that tidbit that I was just going to pick up for you. What I like to see in a channel, this is a Newsome nugget. This is, I actually learned this from, I don't know who the first person who brought this to my attention, if it was Vinny or if it was Tejas. I can't remember. I'll give you guys both a shout out. There's something called, that I've been using in the back of my mind. I'm trying to think of the name. False breakout size or measurement, something like that. What that means is if you're trading a really nice channel, okay, a very obvious channel like this one, and you have a false breakout. How do you know it's a false breakout? You can tell, right? Stock breaks out bullish and then goes down bearish. That almost the exact same size of that false breakout will be on the other end of the channel. It's really kind of uncanny how that works. I've seen it happen numerous times. Where you see a false breakout to one side, it could be bullish or bearish. Let's say it's a point, a dollar breakout. And then the stock comes back down toward the other side of the channel. Look for about a dollar breakout on that channel and then look to buy. Look to buy low, sell high, or sell high, buy low, whatever you're doing. So that's just a little bit of a takeaway from tonight's session. It is something that I do keep an eye on. So what would have happened in this exact trade in real life is, number one, we wouldn't be in anyway because earnings are right around the corner. But number two, had we taken this exact same trade, we would have gotten triggered in and triggered out in the same day, and we would have lost 500 bucks. Congratulations. Because what happened is you were disciplined enough to follow your plan, right? In a real scenario, if this was on a day-to-day situation, what I would have done is as the stock is trading lower and lower and lower into that support level. In fact, let me hop into the hourly chart one more time just to see if I would have gotten triggered in. Okay, so here's the hourly time frame. I don't know if I can zoom in. Okay, here's the hourly time frame, folks. So if I was in the morning room or the afternoon room or whatever, and I'm an active trader and I see that this candle closed pretty much right on this support level, okay, right here. I see this candle close, so this is the closing candle right there. That's the closing candle on that day, if I'm not mistaken. My entry to go bullish would be right here, which is approximately $51.20. That would have been my entry. So had you set up a trade, let's say, again, you're an active trader who you can only set up trades once the market's closed because you have a full-time job or whatever, and you're coming in and, right, you don't want to just take a trade blindly because you can't be there. So once the market opens, you can get into the trade. You can set it up based on an hourly time frame of that chart that says, okay, I'm looking to get in, not exactly at my line, but if I want a little bit of a confirmation of a bounce, which is fine. So once it's down here, same rule applies. Once it's at that support, you set that trigger up and it wouldn't have triggered in. Bottom line is, all I'm saying, if this was a present trade, we couldn't just press the next button and make additional candles appear. I do not think we would have taken in this trade and lost money. That's all I'll be going after, okay? But I will mention this trade, we lost, whatever. Let's move on to the next one. Give me a second to delete this and answer a question. Jesse said, do you notice that the channel tends to break down after that? Yes, usually after a false break, after 2 false breakouts, usually the channel will break out in the opposite direction of the second false breakout. So in this scenario, I am slightly expecting this stock to go higher. I know I've already seen the earnings candle come out, like 2 or 3 candles, but I'm expecting this to make a new high here. I could be wrong about that, but we're about to find out. All right, so I'm gonna go ahead and cancel this setup if I can. Yep, cancel it. There we go. All right, so the next candle. By the way, if I press the step forward button, it goes forward 10 minutes. You guys see that? I don't know how to change that. Does anyone know how to change that time? Does anyone know how to change, instead of it going 1 hour in advance, it goes a day in advance? Because again, if I click that step forward, it just changes it by 10 minutes. I haven't figured that part out yet. Then he says on demand for intraday. All right, well, there you go. That makes sense. Okay, got it. So let's go forward. When was earnings? Okay, so let's go to the 23rd. Let's do some analysis on this candle. And let's figure out what to do, okay? All right, so here's the candle. And again, folks, we had a bearish false breakout right here. So my thought process is with this bullish gap on earnings, we will make a higher high. That's my intention. That's what I'm thinking. So what type of gap is this, folks? At least based on, you know, the real life trading teaching, and you can call this gap whatever you want. It's really irrelevant. What's most important is what I'm about to ask you. All right, a lot of you guys are saying gap and go. Yep, you're absolutely correct. You're absolutely correct. Question number 2, did people go bearish right there? Yes or no? Did people go bearish right there? Yes, they did. Who? Who went bearish? Who can tell me? A lot of people are writing in newbies, noobs, amateur traders, AKA all of us a few years ago. Right? Right? Okay, cool. That's fine. That's cool. So pretty much Jerremy Newsome back in 2012. Got it. Right? So whoever went bearish there, people trying to take the breakout, they went in bearish. The same poor soul who went bearish right there in the breakout, tried it again, they both lost money. Okay, so we know some people are trapped. We know people went short. The reason we know they went short is because the candle is bearish. Bearish candles guarantee you that there is selling pressure that day. So we know people sold to open, sold to close, the people are getting in bearish. So today we have a big upper wick. Here's my plan on this stock. You guys ready? Here we go. We have a resistance right here. Here's what I want to see happen. I want to see this. Am I going to buy the breakout? Yes or no? No. Right? We've already talked about that. Why would I buy the breakout? Right? We've already seen it fail 5 times. I'm going to then, once that happens, once that occurs, I'm going to look for the pullback and I'm going to set a limit buy on that trade. Okay? So here we go. Let's go into the future one more day. All right. Here we go. Very nice looking candle. Very pretty. We got a bullish candle. Again, I would be bullish on both the day trade level and a lot of other levels because we have a nice candle, nice gap. I'm ready for something to occur. Notice that right now I'm still not planning to take the planning to take the breakout. But what if we get 3 or 4 candles and the stock starts trading sideways like this? Would I then look to take the breakout? Yes or no? Ah, you guys begin to get it. Yes, I would be okay taking that breakout because the pressure is building. Pressure is building. It gives you better risk reward. All that good stuff. Could I lose on this trade as well? Of course I could. Remember, don't let fear of losing or fear of being wrong be the reason that you don't take the trade. Instead of not taking a trade just because you think you might not make money, take the trade and follow your plan. Here's an example. Who here has said, I don't think this trade's going to work, so I'm going to take it virtually. And that trade worked out perfectly. And then the other trade, they're like, oh, yeah, this one's going to work for sure. They get in, and then that trade doesn't work. Right? You know why? You know why that happened? Because present trader didn't listen to the past trader. If you have that set up, and I'm not saying a brand new strategy, ladies and gentlemen, okay? I'm not saying something you've never taken before, right? I'm not saying that, oh, I've never played a straddle, so I'm just going to do it. No. I'm saying this is a strategy that you do all the time. You know how this works. You buy low, sell high, buy calls, whatever it is. And past trader says, I'm going to do this trade, comes to the present time of actually doing it, and then you go, I don't think this trade is going to work. I'm going to do it virtually, and it works great. Why? Why didn't you take that trade? Because you lacked the discipline. And if you lacked the discipline, you're going to continually doing that for a long, long time. Listen, traders, I know you got to be on. I mean, I'm being honest with you guys. I know more than almost anyone else here how terrible it is to lose a lot of money. I know the arduous, late night, tearful, prayerful, stressful, gray hair, can't sleep, can't eat, can't watch TV, can't think about anything other than you lost that money kind of feeling, kind of day. I've been there. You're going to have to just get over it because you will lose money trading. If you haven't cried yourself to sleep or at least thought about it, you probably haven't traded the markets that long. When you're in a bad mood and you can't figure out why, and you're just annoyed and you're upset because you lost money, it's going to happen. Get used to that losing money. What traders do is they link pain to the actual losing of a trade. They link pain to losing when that's exactly what they should not be doing. You've got to link pain to not being disciplined. There's a difference. There's a difference to losing money, and then there is a difference to not following the trade. You will miss every shot you do not take. I believe that was Wayne Gretzky. Don't beat yourself up about it. It's not the analysis. Folks, I can give you, you know how many strategies I could be sharing with you guys right now? We could talk for the next 97 days straight, and I can show you guys different strategies every hour. I know a little bit too many strategies. I could also share with you over 1,000 different ways to travel from Nashville, Tennessee to LA, Los Angeles, California. Would you guys agree with me? There's probably 100,000 different ways, different roads, different turns, different bikes, cars, planes, trains, and automobiles to get from Nashville, Tennessee to Los Angeles, California. At some point, though, what do you have to do, folks? If you want to go from Nashville to LA, what do you have to do? You got to pick one. You got to pick one. Okay, so let's say you're flying. All right, cool. So you've picked a mode of transportation. There's many other modes out there. Could have walked, could have taken a boat somehow, could have taken a bicycle, could have unicorned your way over there. You know, you could have gotten a Pegasus and just flown your way from Nashville to Los Angeles, right? You could have done that if you wanted to. You could have gotten Vinny to helicopter ride you from Nashville to Los Angeles, whatever. But let's say you're flying. Okay, you're flying in an airplane. Now, what airline do you choose? What day do you leave on? What time do you leave on? Oh no! How do we live day to day with all these choices? It's the exact same way with the stock market, my friends. It's the exact same thing. Every day you have so many choices. You just got to make one and go with it. How do you choose what kind of clothes you're going to wear? How do you choose what kind of food you eat? It's the same process. All this process is the exact same thing. Once you pick something, just do it again all the time. And I know it. At some point, it's going to be pretty boring. Would you guys agree that flying from Nashville to Los Angeles is probably not the most exciting thing in the world? It's pretty boring. I've done it numerous times. It's not amazing. It's a flight, just like anything else. I'm experiencing the miracle of flight. I'm excited about it. It's really cool. I'm having a good time, but I'm not sitting in my seat just doing cartwheels. You know, I'm not grinning ear to ear and just loving life and just laughing every second and just being ecstatic because I want to fly. It's boring. If you're trading for excitement, you're probably doing something wrong, because trading is doing the same thing over and over and over every single day, and it's all about being patient. Okay? I know you guys came here thinking, oh man, I have no idea what tonight's going to bring. That's really been my thought. That's what back trading is, because what we have just done together in this whole back trading mechanism is we've already gone almost an entire month in less than an hour. So let's do a few more trades on PNR, and I'm going to let you guys go. All right, here we go. And I think, honestly, we probably will just end on this note. Give me 17 seconds. Ladies and gentlemen, did we learn from previous mistakes on this trade to not take that breakout? Yes or no? Yes, we did. And from there, did we realize not to take the breakout? We understood why we didn't take the breakout, and that is going to help us save money on the trade, all from using sentiment of the past candles. That's a big deal. I mean, that right there in itself is a massive, massive thing. So now what I'm going to do is, just like I mentioned earlier, you guys ready for this? Remember, I said if it breaks out, which it did, comes back, which it has, I am now going to look for the bounce. I'm going to come into the hourly chart where dreams come and go. And I'm going to say to myself, where does this bounce look like it might be coming in? Could I buy right where we are now and set a stop? In fact, that's exactly what I'm going to do so that we can get into a trade. Here's what I'm going to do. I'm going to buy right here on this line, and I'm going to set my stop at 51.57. So let's go ahead and calculate this trade. I'm going to ask you guys a few more questions. I'll show you guys think back, and I'll let you go. So maybe we're going to be here for another 20 minutes max. Absolute max. 53.68, I'm getting in bullish. Stop is below this low right here, which is 51.51 for easy numbers. 51.51. $500 risk. Let's go ahead and do it. Bow, 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 bow. Okay, 53.68 minus 51.51 equals 217. 500 divided by 217 equals 230 shares. So I'm going to go ahead and buy 230 shares right now. Let me clear this. And how am I going to do this? Right-click the screen, buy. Oh, that's right. I think I'm going to let you do one trade or something. All right, hold on. I'm going to buy market. Nope, it won't let me do that either. I ran into this problem the other day, and I can't remember why, and I don't know what's causing it. I'm sure it's something I'm doing wrong, but it's after you make one trade, and if you have to cancel that trade, it doesn't let you do another trade. Maybe that's just something on my end. So really what I'm going to do is I'm just going to say we're buying right here, and our stop's down here. Can we be okay with that? Let's just be I'm just gonna, if we go below 51.50 low, we're gonna lose money on the trade. All right, that's what I'm getting at. Okay, so let's just come back over here to daily. So that's what we're gonna do. Now, just to answer the questions, to make sure we're clear, why am I buying at 53.68? Because I said in my analysis seconds ago, if we break out retest, that's where I'm gonna get in on buying the dip. From there, once I come up with that plan, where do you buy that dip? Is just like you saying, what Mexican restaurant do we go to tonight? darling, you just got to pick. And then once you pick the Mexican restaurant, how do you know what kind of queso to get, or beer, or margaritas, or entree? You just got to do it. So if you said, this is what I'm going to do, then you do that. Right? It's just what you do. Now you can use, from here, you could use moving averages, you could use fibs, you could use long-term, short-term. You can use all kinds of things, different time frames, hourly, 15-minute, 1-minute, T-line, Bollinger Band, MACD, RSI, stochastic, whatever puts the feather in your hat, you're more than welcome to do that. For me, I'm buying here because this is a resistance line, and I just said minutes ago, if it broke out and retested, I would buy. Sound good? So that's what I'm going to do. What do you guys think? In my mind right now, I'm pretending that I'm taking this trade with real money. In my mind, do I think this trade is going to work or not? No. The present Jeremy goes, bro, this trade's not going to work. You're an idiot. That's what my present Jeremy is saying right now, like subconsciously. That's the guy that I'm always battling, by the way. Subconsciously, we always battle ourselves. So what I have to tell him is, hey, dude, do you want to go 3 months without meat, beer, sports? That's my pain, by the way, for breaking my plan. I have to be vegan, no beer of any kind, and no sports for 3 months, plus Brussels sprouts, mustard, and beets for 3 days. It's a bad, bad pain, and I can't do it. So I'm telling my subconscious, bro, I don't really care what you say. I'd rather not do that. I'm not going to listen to you. So what I'm doing is I'm practicing, I'm training my brain to not listen to present Jeremy, listen to what past Jeremy said, because he's not emotional. Past Jeremy doesn't know what he's saying. He's just creating a plan, and now present Jeremy has to follow it. Are you guys following along with this? All right, this is what back trading is. This is what we're doing. You have your mental discussions like this with yourself. Try to really figure out what yourself is saying to yourself. You're going to sound crazy. I know that. But really, in a way, all traders are a little strange. We're all a little weird. We all have our quirks. If I'm at a party, everyone knows it because I'm weird. All right. So we're going to go forward, I don't know, to here. We're going to go forward a few days, and we're going to see what's happening. All right, ladies and gentlemen, here's the trade. What's happening? Did it bounce off that line? Yes or no? Yes, it did. Did I know that was going to happen? No, I did not. What I did know is I had to follow that plan. And now, ladies and gentlemen, the fun begins. Now we got ourselves a pennant pattern. And if this trade breaks out, I can increase my stop. And guess what? I can lose less than 1 R. Woo! I can lose less than an R, and that's really my goal in every trade that I take. If I can lose less than an R, if I continually do that, at some point I've got to hit a winning trade. At some point, folks, you've got to win on a trade. Everyone here has won on a real money trade before. If you haven't, email me. If you've never, well, hold on. If you've never traded real money, that's one thing. If you haven't traded real money, you're welcome to email me still, and we'll talk about it. But if you've traded real money and you've never in your entire trading career won one single trade, email me. Let's have a coaching session. We've all won at least one trade. All I'm getting at is there's a winning trade coming. As long as you can keep your money around long enough until you start hitting your streak of winners and you don't just blow out your account. If you lose less money than you make, you'll be profitable. All right, so what I would do in this situation is I would follow my plan by saying, okay, I'm going to enforce a time stop. I want this trade to break out bullish within 1 week. If it doesn't, 1 week from today, I'm going to exit the trade for whatever it's trading at. And if it has broken up bullish, I'll move my stop. I plan to exit at 2R, so on and so forth. All right, here we go. So I'm just going to go forward a week. We're going to go to April, May 7th. I'm just going to press forward. We're going to see what happens. All right, so we're moving forward. Ladies and gentlemen, am I able to lose less than 1 R on this trade, yes or no? Yes, I am. And let's look how long it took. 1, 2, 3, 4, 5, 6, 7, 8 days. It took 8 days. 8 long and brutal days. But now the trade is done what I wanted it to do. I can lose less than an R. I would place my stop right here at 52.75. And let's just go forward 3 more weeks. Again, I know we're running out of time. I don't mean to keep you guys this long. I apologize. I just like talking about this stuff. I think it's really cool. All right, ladies and gentlemen, there was the trade. We made a winning trade. What do you guys think? Is that cool? Is that sweet? I showed you 2 trades, 1 loss, 1 winner over the course of a month using only, and this is what I want you guys to really keep in mind here, using only 2 support and resistance lines. 2 of them candlesticks in volume. Is that at least a little bit impressive? Because I want you guys to get to that level. There's no reason to use everything else. Just use this. 2 lines on my screen and candlesticks. That's it. That's all I use. And I follow my plan. I didn't listen to present Jeremy because present Jeremy is always emotional. Okay? Present Jeremy is always emotional. You got to listen to past Jeremy. And on this trade, right, we take the trade. I make $1,000 on this trade because it hit 2R. I would have lost $500 on that other trade, even though we wouldn't have taken it, but I'm saying we would have just for posterity purposes. So we're up $500 in a month. Who wants an additional $500 a month? Now, granted, yes, you have to pay 38 grand on that trade to do that. I realize that. The trade was expensive. I get it. But you could have done this trade with options. You could have done this trade with a lot of other things. The fact of the matter, folks, is if we really, really, really want to be profitable traders, what's your biggest takeaway from tonight? Go ahead and write that in. Remember, there's not going to be any sales pitch tonight. There never is with real-life trading classes. Just pure raw information. We're here to enrich lives. What's your biggest takeaway? Veronica says, follow your plan. Nick says, patience. That's the takeaway that I want you guys to have. Make a plan. Follow that plan. Don't worry about what present Richard, present Ron, present Nick, present Michael, present Veronica. Don't worry about what you're saying to yourself. Look at the trade. Trade your plan. Be disciplined. If you don't, you'll lose. If you will, you'll make money. Okay. Before we go, I want to show you one other cool thing. How do I do this? Okay. So right here, where is think back? Anyway, I forget where it is right now. My mind's a little frazzled. I've been up for a while. There is in Thinkorswim, you can also go back and look at previous option prices. I'm figuring out where to do that. I know you can do that somewhere around here. Give me just a quick second. Where is, maybe I have to turn, no, I don't turn on demand off. I keep on demand on. Think back, analyze, got it. So go to the analyze tab, click on think back, and ladies and gentlemen, you can pull up whatever date you want, type in whatever ticker you want into Thinkorswim, and you can also do the exact same back trading using the option prices to see what you would have done, made, lost, win, or gain. I just want to show you that because I think it's really cool. Okay, so you go to Analyze and go to Think Back, and you can literally go back in time and use whatever stock you want to figure out the actual option pricing. And you have to go day by day using this little calendar right here. And you can use this same exact thing with another charting software and kind of see how the trade did. Now, for those of you who do not have charting, Thinkorswim or any other charting software that has back trading capabilities, which most of them do, but some of them don't, I'm going to now show you how you can jerry-rig any other charting software to make this work for you. You guys ready? I know this sounds dumb, but I'm just saying remove excuses. If you're sitting there saying, oh, Jeremy, I don't have this technology, man. I don't have a Thinkorswim account. Okay, cool. What you can do is you can go to any other charting software, and I do mean any of them. You can use something from your broker. You can use whatever. And you literally take the screen, drag it back, just like this. You drag the screen back, and you start doing analysis. Right? You drag it, you just drag it back, and then you just click the next button. You just click the next button, like go bar by bar, and just see what it would do. Right? You can click the right arrow on your keyboard. So 3M, ladies and gentlemen, buy low, sell high, yes or no? On this setup right here, are we coming into a support? Support, 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 support. Yep, buy low, sell high, boom. Right? And you could go candle by candle if you want. It could look something like this in TradingView. Next candle, what is that? One white soldier. What are we thinking on a one white soldier candle? Okay, strong gap. If it moves higher, I'm going to get in bullish. You can sell puts, buy calls, buy shares. That was the day of earnings. Okay, so you say, I'm going to get in bullish above this candle, and I'm going to set my stop below the low of this candle. How would that trade have worked? Boom, there you go. So you can do with this with anything. Obviously, you can do Thinkorswim, Trade Navigator, Market Analyst, Ninja Trader, TC2000. Those are ones I can think of. Motive Wave. Yep, thanks, Bob. What's some other ones, guys? Anything else? There's a lot of them out there. It's not special. But let me give you guys a formula. Here's the formula that I want you guys to remember. You're welcome to write this down. Who here wants to make 10% ROI return on their account every month? Who here wants to do that? Again, no sales pitch. It's not a multi-level marketing scheme. I'm asking you guys a question. If you want to make 10% a month realistically, what you're going to have to do is you're going to have to do that exact thing that we've been walking through tonight, 1 hour. How often? Every day. How long? 1 month. You know how many traders I know that have actually done that? Not many. Usually it's the profitable ones. Most of them will do an hour, you know, Monday through Friday, or maybe 2 weeks in a row. But every single day? Yes, every single day. What about my birthday? Yes, your birthday. What about Jesus' birthday? Sure, that one too. Right? Every day for a month. If you can do what I did tonight every day for a month for an hour, you have a much stronger chance of actually making 10% a month every month, which is about 10R approximately, give or take, depending on what kind of you're trading. All right. What about 20%, folks? If you want to realistically make 20% a month in your account, whatever strategy you're using, what do you think? How often do you think you should have to do this? What do you guys think? 20%. Any takers? Mark says 2 hours. Up 2 hours. How often? Every day. For how long? 2 months. Yes. That's brutal. That is a brutal schedule. 2 hours a day for 2 months? All I'm saying is, let's think about some professionals, ladies and gentlemen. Doctors, teachers, chemists, scientists, professional golfers, the ones who are making a lot of money. Do you think they do their practice? Do you think they hone in on their skill 2 hours a day, every day for 2 months? Or are they just like, nah, they just skimp, whatever. Karanga said, is this for one stock? This is in general. Yeah, you can do different stocks. Michael said, yep, yeah, sure they do. Right, professional baseball players, there's no way they get as good as they are or get better than they are or go through high school and college without practicing. Right? We go to the World Series, by the way, all the Cubs fans out there, hope your Cubs win. Game 1's tonight. We just look at them on TV and we go, man, I wish I could make as much money as they do or whatever. And you're like, wow, I can't believe they're making $10 million a year or whatever. Okay, now how much time they've put in, right? You're seeing them now when they're 22 or however old they are. They've been practicing that since the age of 7, 2 or 3 hours a day. You're like, oh, well, they just got that good. Doubt it. I heavily doubt it. You don't see the 7, 8 days, 8 days in a week, the 6, 5, 6, 7 days in a week where they're doing 2 hours of practice. Right? You guys get what I'm saying? We don't see that success, but they did it. That's how they are that good. I can assure you. So when you look at my analysis and my charting and things like that, don't get envious. Don't get scared. Don't get afraid. Don't get impressed. It's just a lot of work. I've been doing this pretty actively for 7 hours a day. It's safe to say that I look at charts on average about 3 to 4 hours for 5 days a week. I did this exact same thing that we're doing tonight. We've spent almost 90 minutes on it so far. And by the way, thanks all for those who are still here. 90 minutes tonight. When I really was at the bottom of the barrel, when I lost all the money, when I was a terrible trader and I didn't know what to do, when I was just at rock bottom, absolute zero, couldn't go down any farther, I did this exact thing that we did tonight for 7 hours a day, every day for 7 months. You're probably thinking, you didn't have much of a life. Nope. Nope. No, I did not. I didn't have cable. I didn't have TV. I didn't really go out much with friends. I had to do it. It's something I had to do. 7 hours a day, every day for 7 months. You do that. If you want a challenge, there's your challenge, folks. If you want the bars have been set. You do 7 hours a day for 7 months, yeah, people are going to think you're a little crazy. No denying that. But you will have an introspection and a self-realization that is rivaled. You're going to know more about yourself and your weaknesses, regardless if you admit them or not. Sometimes I don't like to admit my weaknesses, but I know all of them. I definitely have them, especially if you ask Ashley behind me. She'll tell you. But I have many, many weaknesses. Everyone has weaknesses. We're all imperfect. We're all human. You have to get past that. So every single day, I still have things that I battle. I still have demons that I have to fight when I'm trading. But that's all I want to get at, folks, is if you really want this, if you're here because you all want to trade professionally. You're here, you're watching this video, either live or in a recording. You are here because you want to better your life. I'm not about to do a sales pitch. I know it sounds like it, but I'm not. You all want to better your life. You all want to improve your financial situation for yourself and for others. You want to help your family. You want to be philanthropic. You want to be generous. You want to give. You want to grow. You want to progress. Am I right? Am I getting close? You want to better your life, and you know trading is one way to do it. So if you really want to do it, ladies and gentlemen, I am showing you. I showed you the blueprint tonight to how to achieve that. Do what I did. Do what we did together tonight, every day for a certain time period, and you will be absolutely amazed by how much you learn. Keep it simple. Take notes. Ask a lot of questions. And really figure out how disciplined you can be. One last thing, folks. I promised some of you a special thing tonight. I have a special thing. There's only a few of you here still who can hang with us for that long. For those of you who are here, give yourself a pat on the back. Give yourself a pat on the back, because that was brutal. That's 90 minutes. Okay, 90 minutes. You just sat here listening to my jabberness. Okay. So I want to give you guys a reward. You are about to dictate the future of real life trading. You guys ready for this? You beautiful people are about to dictate what's going to happen for the company. Here we go. I'm launching a poll. What is the next series that I will teach for free to the whole world? What's it going to be? What's the next series? You guys get to choose. There's a lot of them here. We have the day trading series. We have the beginner series, the intermediate series, a new candlestick class, another back trading webinar, or if you want Brad Reed to do financial fundamentals. I know I wrote me. I'll teach that, but I'll be with him. What do you guys want to do? You choose, and I'm going to make it happen. Marcia, how you doing, Mom? Mom number 2. She says, paid for our long vacation last month. I love it. My girl Marsha actually says hello, by the way, Marsha. She's here helping me out tonight. She says hi. She said, I actually asked when you're coming back to Nashville. Probably when we get a chance to go up there. I think we got to go up there first, then she'll come back. We got to go to Mini. It's going to be tough. All right, I'm going to keep this open for 5 more seconds. If you're here, you're losing absolutely nothing by voting. Just go ahead and select something. 5, 4, 3, 2, 1. I'm ending the polling. Oh, this is fascinating. I did not guess this. Here's the results, folks. The next thing that I'm going to be reteaching to the entire world for free, which I actually have not retaught, is going to be the intermediate series. Dun, 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 dun. So they're showing you guys what that is in case you're just wondering. Let me hop over here. Really cool website. Make sure to tell your friends about this. It's called Real Life Trading. If you're watching this video on YouTube for the first time, here it goes. All right. Come over to Education, Intermediate Trading. These are going to be the videos that we're going to update. So technical analysis, candlesticks, chart patterns, and gap trading. So I will probably reword some of these and we'll come up with something. But yeah, I'll be reteaching some of these classes. Those are going to be the ones. I'm going to come up with the dates. All right, so here's the education, beginner, intermediate, mastering, day trading. Awesome. Keep your eyes out in an email. I'll be sending that to you later. Until then, ladies and gentlemen, thank you so much for being a real life trader. I really appreciate it. You guys are absolutely fantastic. And I just want to say thank you so much for being here, either live or watching this in the recording. You are all amazing. You are awesome. Our mission of Real Life Trading is to enrich lives. Make sure to tell people about us, ladies and gentlemen, because again, when I do this intermediate series, we will not have a sales pitch. I am here to help people learn how to trade. So just simply help spread the word about real life trading because we're taking down the system. We're changing the industry, baby, one class at a time. You guys rock. And until next time, love life, live life, and trade it. See you.